By the end of this year, it's going to be very, very clear to everybody that we're in the crash of a lifetime, and we're still only going to be halfway through it, with the likely bottom at the earliest, more like late 2023, and maybe this goes into early to mid 2024. So this top looks more and more like it's in. I was predicting this heavily, all out sell signals on December 8th. In the newsletter, and then again reiterated right before Christmas on December 23rd. And I keep saying last chance. Every time we have a bounce, a last chance. And the market's bouncing today up to about 12,087 on the NASDAQ. And note, I am focusing on the NASDAQ. I consider it the lead bubble, the tech stocks. It's the broadest index of that. The small caps, the Russell 2000 always go down first more, but then the NASDAQ catches up and the S&P catches up, but the NASDAQ tends to go down the most along with the small caps. So that's what I'm focusing on. So the top was 16,212 on November 22nd. The small caps, as they should, peaked before that on November 8th. And a whole series, I showed last year in the newsletter, whole series of tops around the world throughout 2021. That's the perfect sign of a top. Different markets keep topping and nobody makes new highs, or very few markets make new highs. So this continues to look like the real thing. The NASDAQ was down 34% at worst. The S&P down 24%. I mean, I would have loved to see 40% and 30%. That would have been ideal, but this, again, clearly looks like the top. How are the markets going to go up to new highs with the Fed now tightening actively? And the markets don't think. The bond markets are saying the Fed is not tightening fast enough or enough. So the pressure is going to stay on, even though all the cheerleaders on CNBC are going to keep saying, oh, they're not going to tighten much longer. They're going to have to tighten probably well through the end of this year, early next year. Now, what's happening now? We saw that first wave, okay? 16,212 on the NASDAQ down to 10,565. So 10,565 is now the line in the sand. If we break that convincingly, which I think is likely to happen in the next month and a half, why? We're in September, the worst month historically of the year, and major crashes tend to accelerate in September and bottom often in October. Now, I think this next wave, my major assumption is the next wave is going to be at least as much and probably as long as the first one. 5.5, months down, 34% for the NASDAQ. And if anything, it's going to be more. I am targeting, and you can look at any stock index you want to, what were the lows when COVID hit, okay? March, April. What was the low then? I think it was in April 2020. That's where the next wave should go. Now remember, major up and down waves, and this is a major, the greatest of your lifetime, as I've been saying for a long time, have a 5-wave pattern. First wave down, 2-wave bounce against it. We've just seen a 50% retracement. Can't get better than that. Could go to 62, could have been 38. This is enough, and I'd say this market's already topped in its retracement. So again, last chance to sell, maybe even today. 13,190 on the NASDAQ is as high as I see this bounce going. If you see it there, yes, get out if you haven't. And that's when, if you want to short stocks, you want to be in the SQQQ 3 times the Qs, or the NASDAQ 100 short, or PSQ 1 time short. And again, I say if you're going to be short, focus on the NASDAQ. It's right at the heart of this bubble and this rally. So again, we break 10,565. Break through that. Don't just retest it and have a strong bounce. This thing is proven that it's over. I've been saying it's already over. I already say this first crash already proved that this was not an ordinary correction, and this was the end of the bubble, not another correction with another new high coming. And again, the markets have already made a good shot at that and already backing off. So I think we're in this third wave. If it lasts as long as the first one, it's not going to bottom until late January or early February or so. And again, it should be as many points down. So that my minimum target on the NASDAQ, next one is 74,7,500. By then, the market's going to be down 55 to 58%. That's a number I've been throwing out on my megaphone pattern for a long time, okay? S&P down at 2,000, 2,100, and the NASDAQ way down here. So again, this is what we're looking for. The crash is happening, okay? Last chance to sell if you haven't sold stocks, if you're hanging out for some. And again, 13,190 will be a gift from heaven if we get that far in this bounce. This bounce could end any day, any second at this point it's bouncing up, okay? So again, time to get serious, time to get out of stocks, and of course, where do you go? The safest bonds, the 30-year treasury bonds, if you're gonna buy bonds outright. ZROZ, Z-R-O-Z, is 25-year average treasury bonds. It's a little less liquid than TLT. That doesn't bother for people like us trading in smaller amounts. I mean, we're not giant hedge funds, okay? And so this is where we're going. I think by the end of this year, it's going to be very, very clear to everybody that we're in the crash of a lifetime, and we're still only going to be halfway through it. Likely bottom at the earliest, more like late 2023, and maybe this goes into early to mid 2024. So remember, major crashes like this last 2.5, 2.7 years, okay? So we're still in the early stages. Don't look a gift horse in the mouth.